Coming to you live from the palatial studios of PBJ Productions. Welcome to Patrick and BJ Talk Real Estate, where we talk about life, the universe, and everything as it relates to real estate. Hey everybody, it's BJ.
And Patrick.
And we're back talking all things real estate. And guess what? $30 billion in repos.
Repo? Like the repo man is coming?
In Canada, not in the United States, $30 billion.
So like $30 billion injected to like that Dog the Bounty Hunter.
Yeah, right.
Is that what it is?
Not so much.
That's what it sounds like.
Right?
When I hear repo, I think of like
somebody's
Dog the
coming
Bounty
to get,
Hunter.
or somebody's coming to get your truck or something like that. Or,
yeah. You know, can't make payments on the $100,000 truck. Somebody's going to come get my turbo diesel.
Yeah.
Right?
So
is that what it is?
No, actually, it's not.
It's not.
It's not that. No.
Okay.
It's what we are talking about. Repos are repurchase agreements between banks. Okay. So here's how that works.
Okay.
So
I'm not into banking.
Okay.
So I need to, and for the audience, because
Sure.
like I'm not totally up on this.
Got it. So here's the way it works. Banks lend out money, mortgages, right?
Yeah.
In exchange for that money, they get a mortgage on your place. The banks also buy bonds. Okay?
Right.
So
And there's a relationship between those two.
yeah,
With our interest rate,
with interest
and bond
rates
rate.
and bond rate and all those things for sure. And we did. I think David really covered a lot of that
From Olympic Mortgages.
From Olympic Mortgages, and we'll have him on again and probably talk a little bit more about what we're talking about today in more detail with him. But just to give us the parameters of what we're talking about. So the reason banks do this, so basically between lending institutions, they will say, here's my assets, so whatever they are, here's my package of mortgages, here's my packages of bonds or whatever, and I would like to get X number of dollars from you for that at some rate of interest, and that's how we're going to stay liquid. Does that make sense?
Yes, I think so.
Okay.
I'm just thinking about like the amount of like, so they have, they would need money to float like a renewal. Like would they have to reissue money?
Well, so think of it this way:
lend out?
the bank has to have a certain amount of cash to keep operations going. Liquid cash. The bank in order to run.
They don't need to have 100% cash on their debts,
right?
Because it's a fractional.
That's right.
System.
Sure.
Yes.
But let's just say you have to have X number of dollars to keep the doors open.
Right.
How's that? You got to pay your staff.
Okay.
You got
that
to pay,
simplifies it for me. Because,
right. You got to pay your staff. You got to pay the cost of your buildings, et cetera, et cetera, et cetera, et cetera. So a bank can end up where they have assets, but they might not have a lot of cash on hand.
Okay.
Okay. And that's where this comes in, where they go to the other lenders, and typically 10 to 20 billion dollars of repos happen daily.
Yeah, that's money. That's amounts I don't even know. I don't even know what that means anymore, right? Like I can't even imagine.
Yeah.
Like what kind of assets that is. Yeah.
Right.
Yeah.
But it happens daily. So this is a regular occurrence. A lot of people don't know about it, but it's a regular occurrence.
Yeah.
Okay. What we're talking about, essentially, we're talking about a short-term loan. This is what this amounts to. Okay. They're selling their, or not selling, but yeah, they're selling the mortgage. Not really, but they're they're letting you lien their mortgage. How's that? In a roundabout way to get some cash, to make it just easy for us to understand.
Yeah.
Okay. Yeah. So typically there's no issue with that unless the assets are not good. Okay. This happened in 2008 with the States, where I think it was it Lehman Brothers? They were trying to get money on their assets, and everybody said, no, those aren't good assets. We're not giving you anything on those.
Those are all bad loans.
Right.
Like, yeah, because it's subprime mortgages.
Yeah, whatever it was. And they
risk,
so they didn't, wasn't something they were interested in getting involved in. So unless there's bad collateral, hasn't really been an issue unless it's bad collateral or there's not enough money in the system.
Or if there's not enough money in the system, that is very interesting.
Right? So the banks have to be liquid all around, right?
So with the increase of interest rates for the sake of combating inflation, it cost everybody more money.
Right.
And this is one way of like, if the interest rates go up, it takes more money out of circulation.
That's right.
Is this a byproduct? Is this a symptom of this sort of like getting inflation under control?
I think so. I think we know that's what the purpose of the raising the rates was. So here's where now
Certainly, but now there's less cash in the pool of like to go around.
Yeah.
Okay.
So now let's put this back to what just happened here. Okay. The Bank of Canada put $30 billion into that repo fund, if you will, into the repos. So why would that be necessary? First of all, we're not sure if that's ever happened before.
Okay.
Why would it be necessary? And we don't know for sure. That's the thing. We don't know for sure why this had to be done, or what the
timing now.
Yeah, all of that. What we don't know for sure, but I'll tell you one of the things it could be.
Okay.
Okay. It could be one of the banks wasn't able to get any repos from any of the other banks.
Right. So is it one of the national banks? Like, that's a lot of money. Or is it a combination of private banks or government-backed
banks? We don't know.
Okay.
So, but what we know is could be a lending institution that wasn't able to get repos through based on the assets that they had,
repurchases,
or what was available in the market cash-wise.
Interesting.
Yeah.
Yeah. Well, this is probably, it seems like it's a symptom of what's going on now where, with interest rates being up, money being tighter, less money. Mm-hmm. I'm sure all the banks, as they do these repurchases from each other, they're probably putting in more stricter regulations for the parameters of repurchasing.
Sure. Yeah.
Not repoing.
Not repoing. So they're not coming for the truck. It wasn't $30 billion to get somebody's truck or a bunch of trucks and vehicles.
Right.
But, and like we said, we're going to have Dave on and spend some time with him talking about this so we can get more of a bird's eye view of what's going on, because he's the guy, right? He's the guy
He'll
that
be able
really
to explain exactly
put it together for
works.
us, and maybe he's got some conjecture about why it had to happen. Maybe he knows something we don't know. But the point of this is just to say these things are happening. They're happening in the market. They're affecting the market. They're potentially, I think, affecting us as consumers, as buyers, as sellers, as homeowners. And I think it reinforces, or should reinforce to all of us, about being fiscally responsible and, not just spending for the sake of spending, but have a plan for our finances. Have a plan. We talk about getting on the property ladder. Have a plan to get on that property ladder, and not leverage yourself so far in the process that I think we had an episode where we talked about, over Christmas, where we talked about It's a Wonderful Life, where there's a run on the bank and everybody's coming for their money.
Yeah.
I don't think we're going to get into that situation, but you just want to be responsible, I think.
This is an interesting point. Like, I don't remember this happening during that 2008 housing crisis. That never came up. The governments, especially in the U.S., Canada was better situated back then.
Yep.
For Canadian banks, we had more regulations to
Yep.
Not loan out mortgages to like toaster ovens or dogs or anything like that. We would still have to prove income. Mm-hmm. It was a lot harder, or a higher interest rate if you go off a stated income. But the banks in the U.S. were getting bailed out by the taxpayer at the end of the day.
Yeah.
So this is an interesting development. I don't know really what it means. I don't think it's like a crisis idea. I think it's probably measures to keep things from falling apart.
Yeah.
Yeah.
I would agree. So I think the other part of that is we've talked about, we do expect interest rates to come down this year, and we do expect that to affect the market in terms of pricing, and it's going to depend on the market. We reference Victoria's market because we know what's going to happen when the interest rates come down.
Yeah, you know what? I think, along with these we sort of touch on market cycles a little bit as we go along in these episodes. And there's been so much talk about the Canadian economy contracting. We're in a recession, but it's not really in the headlines. Unemployment levels are really, they're gradually increasing since COVID, like after everybody's return. Yeah. But I think if we have a continued contraction of the economy and unemployment, I think at that point unemployment levels will raise, and then we'll see the decrease of interest rates. I think historically that's how it's been. We have a recession, interest rates come down.
Yeah.
Typically.
Sure. Yeah.
So, I'm sure there's cases where maybe that hasn't happened, but that same as like interest rates and bond markets and all these other relations with interest rates and then real estate prices.
Sure.
So things to look out for.
Yeah. So, we wanted to take some time and just give you some information. I think it's there's some value in knowing what's going on. You don't need to know the absolute minutia of the details and everything of what's happening, but to be informed is there's some wisdom in that, obviously. So thank you all for joining us. If you haven't, please take a moment and subscribe. We're putting out, are we out over 3 episodes a week now?
It's 3 or more.
3 or more episodes a week. So you want to make sure that you don't miss anything. So please subscribe so you're staying up on everything that we're putting out there. And if you have any questions about the market, maybe you want to move to Victoria, maybe you want to leave Victoria. We've done episodes on why people are coming and why people are going.
We're happy to answer those questions either in the comments or a private message. Or some of them are really good that have been coming up. We just do a video answer or video response on those questions. Yeah. So more people can see that.
Yeah, absolutely. So put that in the comments as well. If you have any thoughts about anything that we've talked about, feel free to put that in the comments. If you have some questions, you can put that in the comments as well. And like we said, if you want to find out if you're interested in buying or selling and want some help with that, certainly reach out to us or businesses. I can help you with that as well. And thank you for joining us.
Thank you so much for joining us. We'll catch you in the next video.
See ya.